JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 27th of August 2020, so yep, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, some of the charts that I looked at this morning just to see how everything's kind of getting along. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts now, just let's see what's happening here with the German DAX. Now this morning I told you to keep an eye on this 13,100 territory. As you can see, the index drifted a little bit lower but found support just exactly there, from where it rebounded and kind of made its way up again. However, as we can see, the index still remains fractionally in the red. So of course today is not finished. We're still targeting the 13,314 zone, which is the highest point of July. It might not reach it today. Maybe this is going to be something for next week, but again, as long as it remains, as long as the index stays above this 13,100 territory, then yep, we will stay a little bit more on the bullish side. If it if it starts falling below it, then yep, this is where probably the bulls should be cautioned. But if the price starts sliding all the way here below the 12,773 territory, then yes, it could open door towards a further decline. So again, for now, we are leaning a little bit more to the upside. So, but we're initially aiming for that 13,314 level. Now, jumping into NASDAQ 100, and NASDAQ had a fantastic rally yesterday, and this is what I was talking about, guys, yesterday when I was covering NASDAQ and the S&P, basically that in a way, this, for now, we cannot really talk about any downside because the index just continues to push further north, well, what I was saying, that in a way there is a possibility of seeing a test of the psychological 12,000 zone. And on Monday when we were still hanging around here, I was saying that keep your eyes on this because again, there is a good potential for this one to move further north, and as you can see at the moment there's no stopping for that index. Looking at the cash index, we can see that the price is already above that psychological 12,000 territory. So basically, again, it's really difficult here for the bears especially. I hope you're staying away from any shorts because again, it's really difficult one. If you're looking for a short but maybe something more of a to hold it for a couple of days, that could prove to be difficult right now. So that's why, guys, for now, be very careful, very cautious. I know it's difficult in terms of the if you're looking to go long here. On one hand, you might think that the market is already quite overstretched, but as we can see, at the moment there is no such thing as overstretched. It just continues to rally. So of course, the fact that today the index already had reached that psychological 12,000 territory, yep, I mean that kind of just points to the fact that at the moment we just have to wait for that reversal signal first before we could start looking at some shorts here. But again, for now, like I said, it is a little bit of a difficult one. Overall, as you can see, it continues to trade above this upside support line taken from below the 23rd of March, and in a way we can say that as long as this upside line stays intact, well, I mean, the path still holds towards the upside. Now, again, if by any chance this index starts moving below the 11,728 territory, maybe we could consider a bit of a larger here, or should I say, a larger correction to the downside towards this upside support line. But again, at the same time, don't get me wrong, it could be a tricky one here, because we might get something like we had here, for example, where like on around mid-July, where it also showed a willingness to kind of move lower. However, it started just moving sideways and eventually hit the upside line and rebounded and made its way up again. So again, for now, guys, like I said, just watch that sky here, because for now the sky is the limit on this index. Now jumping into silver very quickly, and silver is popping higher, and this is what I was talking about this week, where I was saying that in a way, in order to get comfortable with higher levels, first of all we need to see a break of this downside line taken from the high of the 7th of August, and then we also would need to see a nice good daily close above the 27.73 territory, because don't get me wrong, at the moment, yes, it is pushing higher, so everything could be leading towards the upside. However, we don't want to get a scenario that we had here, for example, on the 18th of August, where the commodity pushed heavily to the upside here, but failed to close above this barrier, above this high of the 13th of August, and then drifted back down. So that's why, guys, for now, probably keep your eyes on this one. Yes, it is pushing higher, but if you're long, then I would suggest kind of to have your stop loss just in case, somewhere around here, maybe just in case this reverses back below this downside line. If it drops back below this downside line, then maybe the precious metal does want to go for a bit of maybe a larger correction to the downside, because as you can see, we do have some space here up until this upside support line, this medium-term upside support line taken from the low, the 18th of March. So that's why, guys, be very careful for now. Now, jumping into Ripple, here the crypto, I talked about this one yesterday, and basically what I was saying, that if it continues to balance below the, if it continues to trade below the 0.2774 territory, then there's a good chance for this crypto to move lower. As you can see today, it did push further south. It still kind of is trading below this level. However, after it did drop nicely to the downside here, it got picked up by the bulls quickly, and as you can see, it got lifted quite well here, kind of got brought back to the 0.2774 zone. So that's why it kind of raises a few concerns here. Don't want to rush into anything yet. How we could play this one out here right now, for example, if we see another slide here, and we see a drop somewhere below the low of the 11th of August here, near the 0.2675, then yep, further declines could be possible. So like I said, the fact that it kind of really quickly got back to the upside here, kind of, like I said, makes us a little bit concerned. Of course, the fact that it's still trading below the 0.2774 zone, yes, of course, this kind of keeps the downside scenario still on the table. However, now at this point in time, given the situation, probably just to be on a safe side, maybe just wait for a drop below the 0.2675 territory, and then we could consider maybe a further move towards this upside support line taken from the low of the 5th of July. Jumping into AUDUSD, and so this pair is pushing nicely to the upside now. it is breaking this barrier that I talked about this morning, the 0.7243 level, and you can see that yes, it managed to reach this 0.7295 zone, which I talked about previously, and that's basically the highest point of February of 2000. Sorry, not February. I think it would be December 31st. If let me just double check this very quickly. So sorry, January, there we go, January 31st 2019. So the pair managed to reach that area, and this is where the holdup kind of occurred. Of course, the big question here is, will this pair stay above this 0.7243 level? If it does, then yes, of course, there is a possibility to see a further move higher. But yeah, let's be careful here. Let's be cautious. Now, of course, as you probably are aware, we did get the Jerome Powell kind of speaking at the Jackson Hole, and it seems that yep, there is some information out of coming out of there in terms of the inflation goals, the Fed inflation goals, and that the Fed is putting employment in front of inflation targets. So again, you can have a read through that. It's all over the news right now. So yeah, and you can see that this is the reaction we had. The US dollar weakened on that news. We did get a pop in the US equity cash equities. So again, for now, this is also the effect that we're having here on AUDUSD, so it's pushing higher. Yep, for now, guys, from the technical side, keep your eyes on the 0.7243 zone. If the rate stays above it, then there's a good chance that we could see a further move higher. But if you're more on the cautious side, and if you want to just more confirmation, you could wait for a push above this the high of this 31st of January 2019 near the 0.7295 level, and then kind of aim for some higher levels. But again, for now, guys, it is where it is. Let's keep an eye on the 0.7243 level. If by any chance this reverses sharply to the downside and remains below this level today, then, well, I mean, maybe we could see a bit of a correction here to the downside. However, as I mentioned before, in order to get a little bit more comfortable with lower levels, preferably a drop below the 0.7136 zone here, marked by the low of the 20th of August, would be needed. USDCAD. Now here the pair, as you can see, this is what we're having here. The US dollar is weakening, and we're seeing a drop below this key support zone near the 1.3133 zone, yep, this confirms a forthcoming lower low, and in a way a further decline could be possible. Of course, we'll keep an eye on the daily candle today. If it remains below this area, then yes, we will continue aiming south. We'll aim initially. We'll aim not for this level, which is this is our, of course, preferred target, the 1.2952 territory, which it has been the lowest point of December 31st, 2019, and also the lowest point of January of this year. But initially, we will target this little territory right here, near the 1.3032, and that's basically the low of the 16th of January, and let's like I said, we'll aim for that level first. Slightly below that, we do have the psychological 130 zone, which also could play out nicely here, but let's not rush into anything yet. First, let's see how this daily candle is going to stay here today. If it's going to stay below this 1.3133 territory, then yes, further declines are possible. Jumping to GBPCHF very quickly. So I've talked about this pair this week, and basically just kind of a quick update. To be honest, not much has changed here. However, we're seeing a nice rebound here from this upside line, from this 21-day EMA as well, and in a way it's kind of it's pointing that there's a possibility to see some higher levels. However, from the technical side, I mean, according to all the TA rules, we need to wait for a break of this of this barrier here, the 1.2037 zone, and then we could consider higher levels. Higher levels, like for example, the highest point of June near the 1.2260 zone. Let's round it up here a little bit, and then yep, we'll take it from there. But again, like I said, for now, a break of this barrier is required in order to aim for slightly higher levels. And finally, EURUSD. So the pair is pushing higher as well. Yes, I mean, again, understandable. Got boosted by the weaker US dollar, and yep, at the moment, it seems that it wants to travel further north. However, this is exactly what I was talking about this morning. That I was saying that one of the scenarios is, of course, if we see the pair drifting lower and dropping below the 21-day EMA here, testing maybe the 1.1725 or this upside support line, which, if remains intact, could act as a good bouncing ground for this pair. But in a way, again, the other scenario was that if it fails to move towards this area right here and starts pushing higher straight away, preferably we would like to wait maybe for a push above the 1.1965 territory, and then yes, we will aim for that psychological 120 zone. So something for you guys to keep in mind. Again, if you're not comfortable with anything yet here, probably just don't do anything. Wait this one out, because again, it's a very tricky one. We already had quite a good maybe move higher. However, nothing is stopping it from pushing further north. So that's why be very careful and probably wait for just that better confirmation before kind of doing anything. So guys, I really hope you found it useful, and just a quick reminder that tomorrow we won't have any Traders Espresso nor tea time. I'll resume on Monday, but I hope you have a wonderful trading day tomorrow, guys. Have a wonderful weekend as well, and I'll see you on Monday. Thank you very much, and bye-bye.